I made $6,000 in a day using only the concepts of liquidity and fair value gap. Honestly, this is all you need to be successful in ICT, at least in my opinion. If anyone needs a one-on-one mentorship, check out the description. And now let me show you how I did it and how you can do it too. So first of all, every trade that I take, it needs to be aligning with the higher time frame, the weekly, the daily, and the 4 hour. Those are my 3 time frames. Usually I go to the higher time frame, like the weekly and the daily, just to set my targets, know where price is going to go to. In other words, the drawn liquidity. So starting with the weekly, I'm not going to go start from the monthly. Why? Because the picture was so clear on the weekly. So there was no reason to go to the monthly in this case. What do we see here? The context here was this sell side liquidity was taken with a wick, and since then, price was going up. So you see, we had that V shape, price going up now, and there was a displacement on this leg from here to the current price action. There is this displacement as well as this one. So price is going up in this case. Now, going up, so price took this level of liquidity going up on this dealing range that we were having from this high to this low in this case. Do we see any fair value gap on here? In other words, any levels of liquidity that we can target or we can consider as our drawn liquidity? I don't see fair value gaps, only this fair value gap right here. But before that, price is going up. What do we consider as a liquidity level on this weekly time frame? As you guys know, I consider pullbacks as a liquidity level. Any pullback on this leg right here, we have this one and we have this one right here. This is a pullback, and this is also a higher probability. Why? Because it's a high in a fair value gap. So this weekly fair value gap, we can see here, this is also a level of liquidity to be targeted. This is my drawn liquidity actually. This is the real one. If we go to the daily just to see if we have any other levels of liquidity as price is going up, do we see something that is close to the weekly levels that we marked? Actually, we can see that this level of liquidity, the weekly one, the pullback, has a fair value gap, a daily one, just above it. So if I extend this to the right, we can see that we have actually a daily fair value gap that is just above the weekly level right here. So that's also another level of liquidity that we can look for. This is a draw liquidity level. So everything is telling us that we are going up, but from where we can look to go up. So we can see that price is now very close to the drawn liquidity, which means that any change of character or any market structure shift, it's gonna be a fake one. So if price does this, price going up, coming lower, this would be a fake market structure shift to go up right here to take more liquidity. So that's one of the views that I'm looking at in this case. But if you go to the 1 hour or, actually the 15 minutes in this case, because what I do is I go 15 minutes and then from the 15 minute, I go to the 1 minute. My entry is on the 1 minute, but I want to be aligned. Even if I'm using the 1 minute, I want to be aligned with the higher time frame. In this case, the daily level or the daily fair value gap actually. Today's video is sponsored by Hanko Trade, one of the best brokers in the business with spread as low as 0, low commission, and you can trade all markets, including Forex, indices, and crypto. And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video. Now back to the 15 minutes, what do we see here? We can simply see that price actually, was ranging here. Final, there was an AMD, so final manipulation here, and then the displacement started going up. So very simple, we're going up. But where do I look for an entry in this case? Targeting what? The drawn liquidity. It's very simple, very obvious in this case. It's not usual to have all of those confluences at the same time and a very clear drawn liquidity. What do we see in this case? We can see that there was a breakout structure right here. This is an old low. And what do we see here? This old low is aligning with the fair value gap. So what do we have in this case? Overlapping fair value gaps. Overlapping period arrays, which is a very high probability entry on this case. So what you could do here is mark this fair value gap and mark the overlapping, take it to the left, go into the 1 minute time frame, see if there is any respect at this level. And what we can see here is price literally respecting this level with a wick. So a wick here going up. What do we have here? So a fair value gap on the higher time frame. Do we have a fair value gap on the lower time frame? Yes, we have this one. So this is a fair value gap on the lower time frame what can we do? We can simply enter from this one. That's a bullish fair value gap. You could enter from the 50% of this, stop loss at the low, give it some room for price to breathe, something like this, and then target what? First one is this external liquidity, and then you can simply extend it to the weekly drawn liquidity. That's a 20 to 1. You know, honestly, I did not take this one, but this is a possible one based on the idea that we are having now. So this is one of the trades that you could have taken using this method. And by backtesting, if you get comfortable with those type of entries, you'll be able to get this type of entry. Now, back into the 15 minutes, this is not the trade that I took. This is a possible one. I did take one very similar to this one. So if we play the price action here, price actually respected this overlapping PD array, started going up. Now price is going up. My trade was on the 20th. So this is still 19th. This is Sunday. Price is breaking structure again. What do we see here? There was this high that is taken. Was it taken with a displacement or no displacement? It was actually taken with a fair value gap and big displacement right here. So we have this fair value gap, big one right here. Usually people will only take a look at the fair value gap and they will try to find an entry, a lower time frame one inside of that fair value gap. And sometimes they'll be losing twice, then give up. And then at the third move, price will start to go up, especially on the lower time frame. People really fell in a lot of traps here. So what do we do in this case? We look for the overlapping, the same way we looked at the overlapping PD arrays here. We look at the same ones here. So what do we have? Price coming lower, going up, breaking structure. What is the overlap? This is the highest high, and it's an old high, overlapping with a fair value gap. So in this case, we're looking for an entry right here at the start of the London kill zone. So playing the price action here, and I just want price to come close to this. And you see, price really went up. It did not take the drawn liquidity. So what do we know in this case? Any change of character on this case is going to be a fake one to go up. That's the point that you really need to understand. Market structure shift before price reaching a point of interest, or in other words, reaching the draw in liquidity, the real one on the higher time frame. Any market structure shift on the lower time frame is going to be a fake one, and it's going to be a liquidity sweep. So now, what are we looking for? Price to come here to the overlapping, look for a lower time frame entry here. So price is going there, close to the, yeah, there you go. So price is coming close to that overlapping, 145, 2 a.m. is there. So now going to the 1 minute, and I would be actually on the 1 minute here. Starting of the London kill zone is right here, 2 a.m. Actually, I was not here at this time. I was not in front of the chart. I came somewhere in here, and I'll show you my entry, and I do have the proof that I entered this one. So price is coming there, still no entry for me. And right here, this was my entry. So I had this fair value gap. So this is where I come about 30 minutes after the starting of the London kill zone. Fair value gap here, very nice respect of the overlapping. So I said, okay, what I'll be doing here is entering a trade about, I think about the 50% stop loss. I said, okay, since price respected here, but take it again, do we see anything to the left? And what I noticed is we have another fair value gap here. So I don't want to lose this trade just because I want to catch a huge reward to risk trade. So I said, okay, I'll cover the low of that fair value gap and give it some room for price to breathe. Why? Because I already have a huge take profit. So what is my take profit in this case? This one right here. Why? Another breakout structure to the upside, go into the draw in liquidity. However, I was not really confident about price going there now from this point. So what I said is I'll take my full position here, as price could just, retraces a lot, take me out, maybe coming again to the draw in liquidity, because it needs some liquidity to be taken. So I was now 100% confident about this trade. So let's see what happened here. Price actually come lower, kind of filled the full fair value gap here. You see, this is where price comes actually almost the fair value gap fully, no stop loss. And since then, it started going up, as you can see. And then started going lower into the overlapping of what? On the 1 minute. And this overlapping strategy could be applied on any time frame. What do we see here? An old high taken with a displacement and a fair value gap. Where is the overlapping? Right here. This is the overlapping. Where does price react from? Right here. So you could have entered this one, and you see price went up, and then it comes back to my entry. I did not move my stop loss to break even in this case. Price started going up, coming back into a fair value gap again, going up, and then hitting the drawn liquidity right here, my first one. And then what is my second drawn liquidity? This weekly high or weekly pullback and the daily fair value gap. All of those are my levels of liquidity or drawn liquidity levels. And you can see that even this one, it worked very nicely. This one worked very nicely. And I believe on the 15 minutes, there was some structure here that I was also seeing here. So what do we have? Yeah, so there was this overlapping. This is the trade that I enter. And what do we have in this case also? There is an overlapping here. So if price doesn't reach the drawn liquidity here, what do we expect? This overlapping to be respected, and then price come maybe into the overlapping or a little bit deeper into the fair value gap and going up. And what do we see here? So price into the fair value gap, hopefully going up into the, okay, so a little bit deeper because it was not in kill zone. Kill zone started going up into the drawn liquidity. So very nice respect. I could have gotten more profit by extending my take profit to the drawn liquidity, the main one, but I was not really confident about this. I said, oh, maybe price is going to retrace a lot, taking me out and then going back into the drawn liquidity. Now, this is also a level of liquidity. What can you do? Based on my entry, you can go to the 1 minute. Any fair value gap after price respecting this level, you could have taken. Price respecting the level, the weekly level on the 1 minute. That tells you a big story that, this level is a major one. Being respected by a 1 minute candle, that's a huge confidence for you. So we have very small fair value gap, price coming lower. This fair value gap respected, you could actually enter it from here, price coming lower, and then this was a huge trade too. So it could be a huge trade, right? And the price coming back again to the extreme fair value gap and then going lower. But what is the main drawn liquidity on this case? It's this daily fair value gap. So if price comes to the daily fair value gap, show a reaction, this is even going to be a better trade, right? And we can actually look for this level of liquidity or this pullback to go to the drawn liquidity on the daily. And as you can see, what happened here? Price took this pullback right here, respected fair value gap. You could have taken this fair value gap to where? To the daily fair value gap here, the main drawn liquidity. So what did we learn from this video? We learned that the overlapping of PD arrays, if we have something like this, big fair value gap, and we have it overlapping with an old high, this is the high probability entry. So the overlapping is a very high probability. Another thing is if we have a weekly level, important level, and it's respected by a 1 minute candle, that gives me a very big confidence that, oh, this level is going to hold. This level is a high probability one, and I could still look for a 1 minute entry after a daily or weekly level taken. But I got to be sure about this level, that this is a higher probability level. That's the important thing. And also, every trade needs to be aligned with the higher time frame. There should be a very clear and obvious drawn liquidity on the higher time frame, the daily, the weekly, and the monthly, if possible. That's all you need. Fair value gap is literally everything that I use combined with the liquidity. That's all I use. And please, guys, if you think that I'm giving you some useful information, some knowledge to use in trading, then please hit the like button, subscribe to the channel, leave a comment, and finally share.